Web3 CEOs and crypto enthusiasts, are you venturing into the metaverse, transacting in cryptocurrency and NFTs, and now wondering what are the tax implications associated with this? You're not alone, and this video is here to help you. We're going to go over the tax implications associated with transacting in the metaverse. Let's get right into it. One of the first questions I get is, why do I have to pay taxes on my transactions in the metaverse? Well, there's a few reasons. Number one is that if you're transacting with cryptocurrency or other digital assets such as NFTs within the metaverse, the IRS has already stipulated that these are taxable events. So according to tax law, you are required to report these transactions. As a result, if you neglect reporting these transactions and you do underreport, there can be significant consequences. There can be criminal and civil consequences in the form of tax cases where you could face prison if it was a criminal tax case, but you'll certainly face penalties and interest if you're underpaying your taxes, even if it's not a criminal case. Additionally, you can just face cash flow concerns and a lot of stress and headaches because of unexpected tax notices that come into the mail, hit you with taxes that you weren't expecting, impact your bottom line, and impact your mental focus because of the stress that these tax notices cause. And additionally, this can just lead to overall future heightened scrutiny related to your tax returns if you are underreporting and you do go under an audit. So those are the main reasons why, if you're transacting in the metaverse, you should be filing your taxes. Now, a lot of people will ask, well, how does the IRS track cryptocurrency? And at the end of the day, if you're transacting in the metaverse on a blockchain, you're transacting on a public immutable ledger. So all the IRS has to do is tie your identity to the wallet that you're using, and you're going to be on the hook for those tax transactions. They have numerous methodologies for collecting this information and doing these calculations, including John Doe audits, 1099 filings, certain tax questions that they're going to place on your tax returns. All of these data points the IRS collects to build information on you as a taxpayer to determine if you're underreporting or underreporting. And then the IRS has partnerships with tax softwares and tax professionals to actually take these transactions that they collect and calculate what taxes that you do owe. So at the end of the day, these transactions are public, they're on an immutable ledger, and the IRS has many different methodologies to start to track these transactions and associate them with your identity. So there are many different types of transactions that can take place in the metaverse and tax implications that are associated with them. So I want to go over a few of them here. Number one would be income from play to earn games or virtual work. This is generally going to be treated as ordinary income depending on your specific facts and circumstances. We also need to consider if there's any self-employment taxes associated with this, if you're operating as a trade or a business. But if you're earning income from a play to earn game, this is going to be taxed as income based off of the fair market value of the asset that you earn at the time of the transaction. And it's important that we track that for reporting the income, but also for establishing your cost basis, because if you hold that asset and sell it at a future point, you're going to have a capital gains event, and we want to make sure that we're considering the cost basis within that. Now that brings me to my next point. If you're buying and selling cryptocurrencies, buying and selling NFTs, this is going to expose you to capital gains. So that means that we need to track the proceeds and the cost basis of each one of these assets at the time of purchase and at the time of sale, and we need to attach an audit trail to that so we can substantiate the instance of each one of these transactions. Another common type of transaction that we see in the metaverse is staking and yield farming. These are also going to be treated as income based off of the fair market value of the asset earned at the time of the transaction. Another common type of transaction that we see are DAO distributions, airdrops, and rewards for participation if you're acting as a member of a DAO within the metaverse. Generally speaking, these payments are going to be treated as ordinary income. In certain instances, we also need to see if you're functioning as a trade or business, if there's self-employment income associated with that. But if you're getting payments from a DAO, you should assume that these are going to get treated as income based off of the fair market value at the time of receipt. And we need to be tracking that appropriately. Additionally, if you're buying NFTs in the metaverse, or if you're selling NFTs in the metaverse, another tax that you need to be aware of is sales taxes. Many states have already indicated that sales taxes apply to NFTs. And this means that if you go to buy an NFT, you're going to have the price of the NFT, you're going to have the gas price, but then also there's going to be a sales tax that's going to get collected on these. So you want to be aware of that. And if you're selling NFTs, you want to make sure that you're properly collecting and remitting this, so you're not on the hook for these taxes when state and local tax agencies come looking for their sales tax collection. So a key consideration when you're transacting in the metaverse is record keeping. This is how you're going to survive an audit, is by keeping good records up front. And there's a few things that you need to make sure that you keep associated with your transactions. Number one is an audit trail. So for any capital gains, any income, any spending, we want to have for each individual transaction a full audit trail that shows where the asset was purchased, where it was sold in terms of wallet addresses or exchanges, and then associated TX hashes with that. This allows us to take any transaction and trace it back to each step of it from its inception, and substantiate the positions and the cost basis that we're claiming with the IRS. Additionally, if you are operating as a business, we want one unified set of financial statements, and we want to have documented all associated journal entries from our subledger to our general ledger. This will ensure that we have a holistic set of financial statements. And the big one that I see go overlooked a lot is that you need your detailed ending cost basis data at the tax lot level. I see a lot of people not get this data or save this data from accounting softwares or their CPA firms. And this is an issue. If you want to take your accounting and roll it over into a new system, you're going to need this detailed tax lot level cost basis report to be able to roll over your ending data, so you don't have to rework all of your previous accounting. Additionally, if you're considering any sort of tax consideration from a planning perspective, whether this is tax loss harvesting or if you want to liquidate a position and understand exactly what your taxes are going to be, we need this detailed level report, not just a summary report or not just neglecting a report overall. We need a detailed report that shows the date of each individual lot that you purchased of an asset that you're still holding at the end of the year. And this is something that I see go widely overlooked. And it's going to give you problems for tax considerations, as well as for just control over your data and being able to switch between service providers. Lastly, if you're transacting in the metaverse, you need to understand that the regulatory environment is developing at a very quick pace related to digital assets and taxation. And this is something that you need to stay on top of on a weekly, monthly, and quarterly basis to anticipate any regulatory changes, so you can be on top of these changes to reflect them in your accounting systems and within your tax plan. And that's something at Camuso CPA that we can work with you on. So if you're transacting in the metaverse as a cryptocurrency enthusiast, an individual investor, or a Web3 business, and you need tax and accounting assistance, look no further than Camuso CPA. Contact me and my team today at CamusoCPA.com. Schedule a consultation, and I'd be happy to sit down one-on-one with you to go over your fact pattern, to understand your accounting and tax needs, to see exactly where you need help.